My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I'm not a salesman. I don't read a script. I've been doing this for 51 years. I'm an expert in IRS resolution matters. Thank you for listening today. I make these short and sweet. I've been on all the major news stations. I've been on Fox twice. I've been on ABC, NBC, CBS, News Nation, Newsmax. I've been on all the major stations. Anyway, they want my opinion on things, believe it or not. I have a bunch of former IRS agents, tax attorneys, and lawyers on staff. We are really dedicated just to resolution, just so you know. Let me just get into the topic. I don't like to speak much about myself. You're interested in what I have to say. The CP504 notice is simply a danger zone notice. It really, really is. It's a notice you must respond to. A lot of people, I used to send these notices out, used to put their head in the sand. They get the CP14, which you've got, the CP501, which you may have got. Maybe you weren't there to get them. I don't know, CP504. The CP504 notice comes out somewhere around 4 months after you send in your initial tax return. In many cases, because of COVID, they suppressed the CP504s. They've had them for a year and they haven't sent them out. So IRS is sending a massive amount of those CP504s out. Let me tell you how destructive the CP504 is. After the end of the CP504, they can file the lien. If you're over $59,000, they'll send you a 508C letter, which absolutely suspends, denies, or IRS, the State Department will reject your passport. IRS is going to take action. What is action? They can file a lien, they can file a bank levy, and they can take your wages. You must. I don't really scare people in any of these because there's not a lot of things that really a taxpayer should be scared about. But when you get the CP504, it's time to take action and say, gee, what is my exit strategy going to be? So how does IRS work these cases? I've been going over these on all the videos I do. IRS wants a financial statement, either a 433A at the service, 433A with the revenue officer, or a 433F with the service center. IRS just wants to make a determination and close your case. They don't really want to send these levies out. They come out systematically. There's no one there watching your case and saying, man, we better send this out on this and this out on this. It doesn't work like that. The computer sends all this stuff out by themselves. That's what they do. Sends all this stuff out by themselves. That a human hand touches these. So at the end of the day, IRS is going to look at your financial statement and either put you into a hardship, currently non-collectible for a couple years, put you in a payment plan, one that you don't want, because once you understand the IRS National Standards Program, you're going to throw up the white flag and say, man, I shouldn't have called. Or they may suggest you can file an offer and compromise based on your financial statement. Those are the three exit strategies. Your financial statement, the one that you give IRS, will determine the road you're going to go on. If you do not understand the National Standards Program, that is, IRS dictates to you what expenses you're allowed to have, depending on where you live and how many in your family. That's going to change the whole thing. So anyway, if you owe a little amount of money and you don't really have a lot, it's okay to call on that 504. If you have any money and you don't want to pay the tax and there's reasons, that's the time where you decide you want somebody. So you can call them yourself, but at the end of the day, know the national standards. But I don't suggest it. I never do when calling IRS. Anyway, I'm around. You can call me anytime you want. Thank you so much. Give me a subscription. I appreciate it. Thank you much.